Welcome to X-CEPTION, where we execute the edge. I'm Nyra, and today we begin the Nyra Trials. This series is not about hype. It is not about prediction. It is not about pretending the market owes you a clean path. The trials are about the part of trading most people avoid: discipline under pressure, response over ego, execution when the chart stops agreeing with your plan. Every trial exposes a weakness that kills traders quietly: bias, hesitation, overconfidence, revenge, impatience, fear. And trial 1 begins with the gatekeeper, adaptation. Because before you can execute the edge, you have to survive the moment the market changes. The first trial is adaptation. Not prediction, not conviction, not showing up with some beautiful little plan you refuse to let die. Adaptation. Because the market does not care what you thought would happen. It does not care what your bias was at 8:30. It does not care what your favorite setup usually does. And it sure as hell does not care how badly you need this trade to work. The market only reveals one thing: how well you respond when the story changes. And most traders fail right there. Not because they cannot read a chart, not because they do not know what support or resistance is, not because they have never seen a trend line, moving average, imbalance, or liquidity sweep. They fail because they are too slow to update. They come in with a plan, but when the market mutates, they stay frozen. That is where accounts die. Before we talk about adaptation, we need to separate prediction from actual trading. Prediction feels powerful. It lets you say things like, I think NQ is going higher today, or ES looks weak, or this should reject. And that is fine. A bias is not the enemy. The problem starts when that bias becomes identity, when you stop observing and start defending. When the market gives you new information, and instead of adjusting, you argue with it. That is not trading. That is emotional negotiation with a chart that has no memory of you. A real trader does not need to be right from the first candle. A real trader needs to be fast when wrong, because reaction is the skill. Reaction is where discipline lives. Reaction is where survival lives. Reaction is where the edge either sharpens or bleeds out. And when traders confuse prediction with execution, there is one place they usually end up first: chop. Chop is not just sideways movement. Chop is punishment. It punishes the trader who refuses to listen. It punishes the trader who keeps pressing when conditions degrade. It punishes the trader who treats every candle like confirmation because they are desperate to make something happen. And the brutal part? Chop usually does not kill you all at once. It bleeds you slowly. One bad entry, one revenge trade, one "it should turn here", one "I'll just take one more", one reset fee, one blown evaluation, one funded account gone because you refuse to stand down. That is not bad luck. That is failure to adapt. Now let's walk through the 3 graves traders keep digging for themselves. The first grave belongs to the rigid trader. This trader shows up with a fixed idea before the market has even finished speaking. They decide the day is bullish. They decide the day is bearish. They decide the setup must work because it looked good 5 candles ago. Then structure shifts. Price stops respecting the level. Momentum stalls. The clean push starts getting messy. The candles stop expanding. The pullbacks get deeper. The rhythm changes. But the rigid trader does not update. They keep trading the old version of the chart. And that is how chop tears them apart. Not because the market tricked them, because the market changed, and they refuse to. The second grave is worse, because it sounds like confidence. It is not. It is bias clinging. This is the trader whispering, I know where it's going. That sentence is poison, because the market does not owe you continuity. Price can trend cleanly, then stall. It can break structure, then fail. It can sweep liquidity, reverse violently, and make the previous thesis look stupid in seconds. Especially on ES and NQ, these instruments shift character fast. Liquidity moves, momentum dries up, volume fades, buyers stop lifting, sellers stop pressing, and suddenly the move that looked obvious becomes bait. The bias clinger sees the shift too late. Why? Because they are not watching the market anymore. They are watching their opinion. The third grave is not always loud. Sometimes it looks patient. Sometimes it looks cautious. But underneath it is delayed response. The third grave is the slow responder. This trader is not always reckless. They are not always emotional from the start. Sometimes they even see the signal. They see price failing to continue. They see the candles losing range. They see the level getting chewed up. They see the entry no longer looks clean. But they hesitate. They wait for confirmation after confirmation. They wait until the trade is red. They wait until the stop gets hit. They wait until the market has already flipped 2, 3, 4, 5 candles ago. Then they finally say, Okay, maybe conditions changed. No, conditions changed before the pain. The pain was just the receipt. A professional updates when the signal changes. An amateur updates when the damage is already done. So how do you know when the market is changing? You watch behavior. Not hope, not opinion, behavior. Now let's make this simple. You do not need to overcomplicate tape behavior. When price pushes hard but does not make progress, that is exhaustion. It means effort is increasing but reward is shrinking. The market is spending energy and not getting anywhere. That matters. When buyers and sellers are both aggressive but price stalls in the middle, indecision is entering the room. That is where chop starts breathing. When one side stops making new highs or new lows and volume starts fading, that side may be losing control. That is where the other side begins preparing to take over. This is not magic. It is pressure. It is fatigue. It is rhythm. Think of it like tug of war. When one team pulls hard but cannot move the rope anymore, they are burning energy. If the other side holds long enough, eventually the tired team slips. That slip is the shift. That shift is what you must learn to see before it becomes expensive. And if you trade ES or NQ, this lesson is not theory. It is happening in front of you every session. If you trade ES or NQ, this happens constantly. Push, stall, absorb, fake continuation, exhaust, flip, again and again. 1 minute it looks clean. The next minute the move has no authority. One candle looks like continuation. The next candle erases it. One setup looks like a breakout. Then suddenly it becomes a liquidity sweep. That is why rigid trading gets slaughtered. You cannot trade these markets like they are static. They are living auctions. Every candle is new information. Every failed push matters. Every stall matters. Every inability to continue matters. The trader who adapts gets to survive. The trader who predicts and prays becomes liquidity. Now that you know what failure looks like, you need the protocol for surviving it. So here is the protocol. Simple. Brutal. Necessary. First, invalidate your bias in 3 seconds. If structure flips, your thesis is garbage. Kill it. No ceremony. No debate. No emotional funeral. The old idea is dead. Second, update when it changes, not when it hurts. Pain is late information. Signals come first. If you wait for pain before adjusting, you are already behind. Third, when chop starts, tighten size and soften aggression. You do not attack chop like a clean trend. You reduce pressure. You lower exposure. You stop forcing entries. You respect the environment. Fourth, revenge trades and emotional coping entries are trash instincts. They are not strategy. They are not edge. They are not confidence. They are a wounded ego trying to feel powerful again. Cut them off. Pivot. Breathe. Update. And before your ego tries to fight this, understand something clearly. Adaptation is not weakness. Some traders think changing their mind makes them weak. It does not. Changing your mind when the market changes is strength. Refusing to update is weakness dressed up as conviction. There is a difference between discipline and stubbornness. Discipline follows the system. Stubbornness follows the ego. Discipline says, my setup is no longer valid. Stubbornness says, it still might work. Discipline says, conditions are degrading. Stubbornness says, one more trade. Discipline says, stand down. Stubbornness says, I need to make it back. And that difference? That difference is an account surviving the day or going straight into the damn graveyard. So what is the real failure? It is not being wrong. Being wrong is normal. The failure is staying wrong after the market already told you. You do not lose because the market is smarter than you. You lose because you respond too slow. Too proud, too rigid, too emotional, too attached to the first idea. The market does not need to outthink you. It only needs you to hesitate. It only needs you to defend a dead thesis. It only needs you to ignore structure for a few more candles. It only needs you to believe your plan matters more than its behavior. And once you do that, it has you. Because now you are no longer trading the market. You are trading your need to be right. That is where the edge dies. So this is the verdict of Trial 1. Not whether you predicted the move, whether you adapted when the move changed. Trial 1 is not asking whether you can predict. Anyone can predict. Anyone can draw an arrow on a chart. Anyone can say bullish or bearish. Anyone can build a story around price after the fact. Trial 1 asks something harder. Can you abandon the story when the market invalidates it? Can you shift before the damage gets loud? Can you reduce aggression when the environment turns hostile? Can you kill the ego fast enough to save the account? That is adaptation. And adaptation is not optional. It is the price of entry. And that brings us back to the only thing the market actually measures, your response. The market does not care about your plan, only your response. So stop worshipping prediction, stop defending bias, stop waiting until pain teaches the lesson, read the shift, respect the stall, cut the dead thesis, adapt before the market takes its payment. Because you do not need to be right first. You need to respond cleanly when the truth changes. Fix the response, or the market keeps collecting from you. This was Nyra Trial 1, Adaptation, the first gate, the test of whether you can survive the moment the market stops matching the story in your head. Pass this trial, and you stop bleeding from stubbornness. Fail it, and every plan you make becomes another trap waiting to close. Next up, Trial 2, Failure. Welcome to Failure, a trader's first mentor. And if you are brave enough to face that one, I'll be waiting.